one can never call the top, but should one legitimately question the kind of valuations at which some of these PSUs, defense, non-defense, etc., are trading at?
Yeah, good morning, Niraj, and thank you for the opportunity. It's a great question, and there's two ways to think about it. I mean, the easy way is to say yes, valuations are stretched, and that's going to be a problem. And I think for some of the companies that will be the case. But your comparisons with some of the overseas companies is interesting. I'm going to take it slightly differently in a few minutes as well. But here's what I think is that the growth potential in India is so huge in these sectors, in terms of the expenditure, which will continue for many, many years. And obviously, the growth potential for some of these listed companies overseas is probably less, that in terms of the potential going forward. So I think you've got to look, and there's an interesting study we did many, many years back, where you looked at kind of Nestle's valuations, as a whole of the European Union, the UK kind of rose in terms of consumer spending. It was always on 40, 50 times throughout that period. And this is the growth of India now. So I suspect you're going to have high valuations that some will get stretched, as you rightly point out. But the different angle is here, I just take it slightly differently, is, Hyundai's IPO is coming out. Now, I've seen some of the valuations they're talking about. That's, a large percentage of Hyundai Motors' Korean market cap, because the potential is there, for these companies, given India's kind of growth rates going forward. And obviously, the fact that, these economies themselves are kind of, saturated and there's not really that much growth for them. So I think you have to kind of look at it from a growth PE in terms of India's valuations. But I agree that some of the companies, and I would say this probably more so in the industrial side, where I look at the L&Ts and the BHLs of this world in terms of the order flow, because that's a move of the share price. Execution is a completely different thing. And as we've seen in the past, execution is always disappointed to some extent. So if you think order flows are coming in, these share prices will remain high.
Okay. Andrew, but the question is, if you had these stocks in your portfolio, your purchase price doesn't matter, whether you're sitting on 30% gains or 100% gains, you're effectively using this amount as your capital. Would you take some chips off the table within this bucket, be it defense, be it fertilizers, be it some of these capital good executors like BHEL?
Yeah, it depends what the opportunity cost of keeping in them compared to other opportunities. So I could see that there'd be other opportunities in different segments of the market, which I would want to kind of play in on a kind of a longer term theme. So yes, if it's hit my target prices, then I'd be looking at saying, okay, I may incrementally going to get another, let's say 50% over the next 1 year or so, or is it going to be lower than that? And if I had another opportunity, let's just say in one of the sectors I like is beverages. If I feel that beverages is going to give me a better return, then I'd obviously switch some of my some of that money into this sector.
Got it. Andrew, what will make you, so what within this very stretched set of names, where is it that you are comfortable? I heard you say that one, it is an opportunity cost that you would look at, and two, in select cases, maybe growth makes up for it. Where is it that you believe that these egregious valuations are justified, and why so?
No, I'm not saying that the valuations
if they are,
are justified.
sorry, I'm asking you.
Yeah. I think there's three things I know. There's three sectors I can hand on heart say I know there's going to be significant investment over the next 3 to 5 years: defense, renewable energy, and railways. That's going to be the focus of the government. So you're going to see more and more order flows in these sectors, which drive share prices. I'm not saying the valuations are correct because execution will still be the key. But in this kind of market where you're looking at the growth sectors, then these companies will see turnover. If you look 3 years out, will be significantly higher than you're seeing today. So the PE you're looking at today will be completely different than it will be in 3 years' time, and that's how you got to fast forward. Not look at the PE today. Say what's that PE in 3 to 5 years' time, and does it justify it? So if you say your PE is 60, 70, but in 3 to 4 years' time it's nearer to 20, if you still got a valuation, which is reasonable.
Got it. Andrew, just a word. The bull will argue that there is order visibility. The book to bill looks very, very strong. And there is a bit of a ring fencing of domestic defense in that the orders are going to them. They are not necessarily going to export oriented firms. And if anything, some of these companies will be able to export in times to come. Can one make a legit case, therefore, for some of these defense names in particular, shipbuilding or defense names, to trade at this 60, 70 PE multiple?
To my mind, that's an argument which I wouldn't be kind of so excited about. I mean, I can see the electronic manufacturing, for example, Niraj, but shipbuilding is slightly different. There's huge competition elsewhere in the world, so I'm not sure that the export kind of thing plays to my mind. Again, it's a very simple. If you expect orders to come in, most of these stocks the per share price will move on order intakes, and that's it. So if you think the order intake's slowing, for the next, say, 6 months or 9 months, then maybe these shares will at best tread water, if not go down, because there's no new excitement to come in. The problem for the defense sector is very lumpy in the orders, and you don't know when they're going to come, because obviously because of the nature of the orders given by the government. So in terms of they're more sensitive. So you could be looking at some big orders coming, but you just miss out by the fact that you've taken some profits off the table. But I'm not big on this export thing for these sectors. I'm big on the fact that if you expect order inflows to come, which we do, then share prices will react to that.